Hey everybody, Mark Stuart, FreeSanDiegoSearch.com and Prudential California Realty. Remember, we're going to change our name to Berkshire Hathaway Home Services this fall. So we know we're in a historically strong seller's market, and though it's a frustrating time for many buyers dealing with multiple offers and so forth, I'm really hoping that those same buyers can take solace in some of the data and facts I learned after having dinner with Alan Nevin of the London Group last night. London Group is a leading real estate consulting firm here in San Diego. What was interesting about his take on real estate is that he talks more about the economics which support a strong housing market and how those economics drive pricing. In a 2011 interview, he stated San Diego was one of a dozen metro areas doing very, very well, and that we have 7 major industries here, and all 7 are on a growth path. Industries like biotech, our universities, military spending, federal government spending, and even drone development and production. He loves the drone development thing. Those are industries that are bringing outside dollars into San Diego and therefore fostering economic growth. Furthermore, we're adding an average of 25,000 new residents per year here on average, but we're only producing on average about 10,000 new dwelling units. In the last 3 or 4 years, we've only been producing about 2,000 new dwelling units. Adding more pressure to this market is the fact that unemployment continues to improve, which, think of a family member that lost a job or is unemployed. First thing they're going to do, first of all, they're going to probably move home or move in with someone because they need a little help for a little while. And the first thing they're going to do when they get a job is they're going to move out and get an apartment. Last year in America, there were 6.5 million families that had doubling up of family living situation last year. And this whole thing is beginning to unwind, which is putting more pressure, mostly on the rental market. Mr. Nevin believes that we'll continue to see upper single-digit to low double-digit pricing growth for the next few years. And the only limiting factor to that, I asked him, what's going to slow this down? He said, well, when interest rates get into the mid-5s to 6 range, things will really start to slow down. But he feels like the federal government has to keep interest rates low for at least the next couple of years because they're printing so much money that they can't afford to pay this debt with a higher interest rate. And what's his favorite segment? This was a question I asked him on the way out. He really likes apartment buildings that need some fixing. He likes to maybe take like a grade C building and move it up to a high B in a quality rental market or quality neighborhood. Can result in rent increases of upwards of $400 a unit. And with the really low vacancy rates we have and the rising demand, he sees this as really being a sweet spot in a super healthy real estate town. So if you have any questions, please give me a call. You know how to reach me. Mark Stewart, FreeSanDiegoSearch.com. Thanks so much for all your support and have a great day.